What's up, guys? Welcome to Invest Today. My name is Jack. Today, we're going to start a new series called Three Stocks I'm Buying in the Month of October. So, this is a trend that's kind of caught fire among investing channels across YouTube, and they kind of go into three stocks that they're going to buy or watch and why. I'll do the same thing, but what's going to make this one different is in the month of November, when I'm telling you three stocks to buy for the month of November, I will look back on the stocks I recommended for October and we'll see exactly how they did during that month, those 30 days. Let's get right into it, guys. So the first stock we're going to take a look at is Facebook. Facebook is trading at around $160. It's been range bound ever since its large pullback about, let's say half a month ago. It has an earnings date of October 30th, 2018, so coming up in just over a month's time. And I personally believe that'll be a catalyst to send the stock higher. Now, it has a PE of 25, and for a tech company that's actually extremely low, go look at Google's PE. The only other tech company that really has a lower PE right now is Apple, and that one's kind of a unicorn. There's only one Apple, and there only will be one Apple. That's another great company to get into, but right now we're going to stick with Facebook. Facebook, it has a lot of things going for the company. If we take a look, it has great ad revenue, which is only going to continue to kind of explode in the next couple of years. It has a relatively cheap valuation as tech stocks go. It's growing their business and profits at around 30%. It owns Instagram, which it's starting to get some good sizable revenue from, but it's still kind of in the beginning stages of that. And Instagram, it's growing its users so fast, significantly faster than Facebook actually is. And they will continue to monetize that in the future. Furthermore, WhatsApp pretty much has no monetization, so that'll be something that this stock will, get some rewards for in the next couple of years when the CEO team kind of they figure out how to monetize it, kind of like Facebook is with the ads. The Facebook Marketplace won't be relevant for this video because it's more of like a 2 to 5 year project. But over the long term, Facebook Marketplace will give shareholders great gains on this stock. And again, they have a great management team, and I believe this stock will stay range bound. It might end up down at the end of the month. Honestly, I think it'll probably be around 170, give or take, at the end of the month is my prediction. But I believe the earnings will begin to be the catalyst to send the stock higher. Guys, let's take a look at the next stock, which is Lam Research. I believe this stock is a great buy right where it's at. It has had a giant pullback along with the rest of the chip sector, and now it's down to around $150. I believe any shares bought below the $160 mark is an absolute steal. So if we take a look, the PE ratio is an 11.5, which is extremely, extremely cheap for a chip sector. It pays a great dividend. The yield is 2.56%, so you can see some returns on your money, your invested capital, without the stock price really doing anything. It's a cyclical business, and that's why I believe it's down huge. Kind of the demand for some of the chips has pulled back because of the giant influx of supply in 2017. You see all the chips had a great 2017, but they're kind of down in the year of 2018. And that's kind of just the nature of their cyclical business. But if you think about it, every phone now, more and more devices are taking these companies' chips, and there's going to be an increased demand for memory. And it's only going to poise these stocks to kind of rebound and then see great gains over the long term. They have buy ratings on Credit Suisse and the Street, and a lot of analysts are very bullish on this stock. Again, I reiterate, this stock will continue to grow up in the future once it bucks some of this cyclical trend, and it'll have great gains. So FedEx is our third stock that we will be talking about to buy for the month of October. Now, the stock is trading at $255 right now, and they have an earnings coming up on the 17th, so only a couple days. I know this video is made for the month of October, but I would buy FedEx before their earnings. I honestly believe they're going to blow the numbers out of the park, and it will continue to beat and outperform the market for the holiday season. FedEx is currently on a rally right now. It traded all the way down to $214, but it has since gained some support down at those levels, and it has broken its 250-day, and it's on top of its 20-day as well. And honestly, it's on this little mini rally, and I believe it'll continue for the entire month of September in October, and the earnings will be the catalyst for this. It pays a nice, little dividend at pretty much 1% yield. It's not a ton, but it's enough. I'm definitely not going to complain with the extra percent that I get when they pay out their dividend. It has a PE ratio of 15, and which is honestly, it's pretty cheap right now for the market conditions. I think the market trades around a 23 average, so 15 is a great steal. I honestly believe even at these levels. They're hiring record seasonal temp workers for this upcoming holiday season, which is about to pick up. And they said, I see signs, where I am in New Jersey, all over the place for FedEx. They're hiring part-time and seasonal workers. So it has a cheap valuation, it's on a rally, has earnings coming up, and they're hiring record amount of temp workers. For those reasons, I believe this stock will outperform the market for September and October and all the way through the holiday season. Today, thank you guys. Please click the subscribe button right here. Throw me a like, throw me a comment. Let me know what you think of these videos. If you want me to continue this series, and just let me know your overall thoughts. Thank you guys.